wrote about sentiment a bit this week, and I think it's really important, and it's something that I continue to follow and track, and I think is relevant to what we do on a daily basis. Is there's this feeling, I think, that valuations are stretched, and it's true. If you look at the metrics, the valuation numbers are a bit stretched. But there's a couple other things that you need to think about, which is money supply, which we've talked about, and sentiment, I think, which is very key to what happens to the direction of the market. And so this is our internal view around sentiment. And if you look here, we've been hovering around these levels, around 45. And, market tends to act in chaotic ways only when we reach certain levels, which is extreme pessimism or extreme optimism. And we're nowhere close to those barriers right now. If we look at the CNN greed and fear index as well, we're down around 10, 12 on the fear level. So we're getting a little bit more fearful on that side of things. Our index tracks a few more metrics than they do. But if you look back historically here, this is from 2018 when they started using the tracking mechanism. If you look at when we dipped around this level, which is where we are today, around the 45 levels, and then you match it up to the other periods where we saw markets start to accelerate. Once we got down to the lower levels around 45 and below, you tend to get to the market consolidating around 45. If you dip from here further, obviously market would need to fall for that to happen. You likely again get a reacceleration higher, and that does line up a lot with our view where we think money supply comes back and markets start to reaccelerate. But right now we're kind of this neutral treading water period. I think a lot of that has to do with the US shutdown, and we'll see what happens from here.